Good morning and welcome to your pre-market report for the special budget session on Sunday, 1st February 2026. Let us look at the expectations for the Union Budget 2026. The biggest expectation is tax relief for the middle class and salaried taxpayers. There is strong demand for a higher standard deduction and some rationalization of income tax slabs, especially for mid-income earners. Any relief here could increase disposable income, boost consumption, and improve sentiment. Investors are also watching closely for clarity on capital gains taxation, which could encourage long-term investing in equities. Infrastructure spending is expected to remain the backbone of Budget 2026. The government is likely to continue its strong capital expenditure push, focusing on roads, railways, logistics, and power infrastructure. Higher capex not only creates jobs but also drives long-term economic growth. From a market perspective, this is positive for sectors like capital goods, construction, cement, and engineering. Budget 2026 is also expected to strengthen manufacturing and MSMEs. Support could come in the form of easier credit access, incentives for technology upgrades, and continued backing for the PLI schemes. With global supply chains shifting, India has a big opportunity to position itself as a manufacturing hub, and this budget could help accelerate that transition. Technology and innovation are likely to be key themes. Expectations include higher spending on AI, deep tech, digital public infrastructure, and skilling programs. The goal is to prepare India's workforce for future-ready jobs and support long-term productivity. For investors, this could mean structural opportunities in IT services, digital platforms, and emerging tech ecosystems. The rural economy remains critical for consumption growth. Budget 2026 is expected to support agriculture through higher allocations for farm incomes, irrigation, and agri-infrastructure. Affordable housing is another focus area, with possible tax benefits for homebuyers and continued support for housing projects. These measures can boost rural demand, employment, and sectors like FMCG, tractors, and housing finance. While supporting growth, the government is expected to stay committed to fiscal discipline. Maintaining a controlled fiscal deficit is crucial for macro stability, lower borrowing costs, and investor confidence. Markets will closely watch how the budget balances growth spending with long-term financial stability. In summary, Union Budget 2026 is expected to focus on growth, infrastructure, manufacturing, and technology, while offering selective tax relief and maintaining fiscal discipline. For investors, the real impact will be seen in sector-specific opportunities and long-term execution rather than short-term market reactions. That's your market snapshot for India on February 1st, 2026. For more such updates, don't forget to like, subscribe, and hit the bell icon. Wishing you a focused and profitable trading session ahead.